Did you know that in 2025, while the S&P 500 delivered solid returns, certain cryptocurrencies saw gains that made traditional investors question everything they thought they knew about wealth building? But here's the twist that nobody's talking about. The answer to whether you should choose crypto or index funds in 2026 isn't what you think it is. I'm about to reveal a perspective that could completely change how you approach investing this year, and by the end of this video, you'll have a framework that most financial advisors won't tell you because it challenges everything they've been taught. Let's start with what happened in 2025 that's setting up 2026 to be unlike any investment year we've seen before. Traditional markets showed resilience, but they also revealed cracks that smart money is already positioning around. Meanwhile, the crypto space went through what I call the Great Maturation. Institutional adoption reached levels that would have seemed impossible just 2 years ago. But here's where it gets interesting. The question isn't really crypto versus index funds anymore. That's the old way of thinking, and it's costing people massive opportunities. Think about this for a second. When your grandfather invested, he had maybe 3 choices: stocks, bonds, or real estate. When your parents started investing, they had mutual funds and maybe some international exposure. Today, we're living in the most diverse investment landscape in human history, yet most people are still thinking in binary terms. The real game changer for 2026 isn't picking one side. It's understanding that we're entering what economists are calling the hybrid wealth era. This is where traditional and digital assets don't compete. They complement each other in ways that create entirely new risk-reward profiles. Let me paint you a picture of what's actually happening right now. Major pension funds are allocating percentages to crypto that would have been unthinkable 3 years ago. At the same time, crypto companies are launching products that bridge directly into traditional index fund strategies. We're seeing the birth of something completely new. Index funds in 2026 aren't your parents' index funds. The innovation happening in this space is remarkable. We're seeing targeted exposure to artificial intelligence companies, climate technology, and emerging market opportunities that didn't exist before. These aren't just broad market bets anymore. They're precision instruments for capturing specific growth trends. But crypto has evolved too, and this is crucial to understand. We're not talking about the wild speculation of 2021 anymore. The infrastructure that's been built over the past few years has created investment vehicles that look more like traditional assets, but with the upside potential that only digital assets can provide. Here's what most people miss about index funds in 2026. The passive investing revolution is entering its next phase. Smart beta strategies are becoming mainstream, and the fees are dropping to levels that make active management almost impossible to justify for most investors. You can now access sophisticated investment strategies that were once only available to institutional investors. The dividend growth story in index funds is particularly compelling right now. Companies are sitting on cash levels that historically lead to significant shareholder returns. The yield environment is setting up scenarios where dividend-focused index funds could deliver returns that surprise even the most optimistic projections. Now, let's talk about crypto's 2026 opportunity, because this is where things get really interesting. The regulatory clarity that emerged in late 2025 has created a foundation that institutional money was waiting for. We're seeing adoption curves that mirror the early internet, but compressed into much shorter timeframes. The infrastructure layer of crypto is where the real wealth is being built. While everyone focuses on price movements, the underlying technology is creating economic value that's measurable and sustainable. This isn't speculation anymore. It's economic transformation happening in real time. But here's the psychological trap that's catching most investors. They're approaching this decision with scarcity thinking. They believe choosing crypto means abandoning index funds or vice versa. This binary thinking is the biggest wealth destroyer I'm seeing right now. The sophisticated approach for 2026 recognizes that correlation between asset classes changes during different market cycles. There are periods when crypto and traditional markets move together, and periods when they move independently. Understanding these patterns is like having a roadmap that most investors don't even know exists. Risk management in 2026 looks completely different than it did 5 years ago. The old 60-40 portfolio is being replaced by dynamic allocation strategies that can adapt to market conditions in real time. This is where technology is actually serving individual investors in ways that level the playing field. Consider this scenario that's playing out right now. Inflation expectations are creating demand for assets that can maintain purchasing power. Both crypto and certain index fund strategies offer inflation protection, but through completely different mechanisms. The smart money is using both. not choosing between them. The tax implications alone make this decision more complex than most people realize. Crypto's tax treatment is becoming more favorable in certain situations, while index funds offer tax efficiency that's hard to beat. Understanding how these interact with your specific situation is crucial for maximizing after-tax returns. Here's my framework for 2026, and this is what I wish someone had told me years ago. Start with your foundation, that's index funds providing steady, predictable growth. Then add your growth layer, that's where crypto fits, but sized appropriately for your risk tolerance and timeline. The magic happens in the rebalancing. As these asset classes move independently, you create opportunities to buy low and sell high automatically. This isn't timing the market, it's using market volatility to your advantage systematically. Your action plan starts today. Evaluate your current allocation, understand your timeline, and build a strategy that uses both tools for what they do best. The biggest opportunity of 2026 isn't choosing sides, it's recognizing that the game itself has changed. Don't let binary thinking cost you the wealth-building opportunity of a lifetime.